Hello everybody and welcome back to the channel. Today we're going to be taking a look at Kraft Heinz and we're going to see its intrinsic value to see if it will be a good investment to add to your portfolio. Now, you've most likely heard of this company if you've ever went to a supermarket, or if you've seen this company. They have this beautiful ketchup bottle that I think everybody knows. This one right here as well, and also the hot dogs. I'm pretty sure you're familiar with this brand. But if we take a look at the current stock and we take a look at the 1 year chart, you can see it's pretty much everything in the red and is currently down 14% in the past year. And even worse, if we take a look at the max history of the stock, we can see it's almost at all-time lows, which was at $23 in 2020, and we're very close to the spot currently at $29. Now we can see this is not a small company, 35 billion in market cap, and it has an amazing dividend yield of 5.47%. Now if we take a look at the companies that they own, you can see all the countries they are in and all the companies that they own in each of those countries. But let's take a look at the most popular ones. For example, we got this great brand Philadelphia for that cream cheese. We have the beautiful Jello, we got Kool-Aid, and we also have Lunchables. I think for me, those are the most popular ones, at least here in Florida where I live. Of course, taking a look at Heinz and Kraft as well, which that's why it's called Kraft Heinz, because they did a merger together. And the company overall, I mean, is one of the largest food and beverage companies in the world. It's in over 40 countries. In 2022, they did over 26 billion in net sales. As we just saw, they have a good portfolio of different and popular brands. And of course, meals donated to combat food insecurity globally with partners around 334 million. Currently, Wall Street analysts have this company at a hold from a rating of 3.22 out of 5. They have 3 strong buys, 1 buy, 16 holds, and 2 sells. Now, this isn't the intrinsic value, but if we take a look at the analyst price target for the stock, you can see that the average is currently at 33.38, which is very close to our current price of 29, and the highest being 56.90. One thing to take a note of is if we take a look at this chart compared to the S&P 500 performance in the 1 year chart, you would have lost 19% in Kraft Heinz and you would have made a whopping 23% investing in the S&P 500. And to add on to that, if you take a look at the 5 year chart, you would have only made 5% in Kraft Heinz and made a crazy 81% in the S&P 500. However, this is not taking into account the dividends that you do get paid from Kraft Heinz. In the latest earnings, which was in 12th of this month, their EPS was 0.84, which was beat by 0.06 from what analysts were expecting, and their EPS, their actual, was 1.76, beaten by 0.98%. Now if we take a look at this earning chart right here, we can see they beat everything in 2024. However, they are expected to fall in 2025, so that makes me wonder if this really is a good company to invest, even though they pay a good dividend. But they are at all-time lows on the chart, so that's why I'm looking into it. So let me know in the comments below what you think. As always, and as I said in previous videos, I do want to see 2025 and 2026 EPS estimates to be increasing, and that's the case for this company, from 2.79 to 2.87. And the same thing goes for the annual revenue, going from 25.29 billion to 25.6. So let's go ahead and take a look at the intrinsic value to see if this would be a good investment. So we got to type in the ticker symbol KHC, and then we got to find the growth rate projection for this company. So to do that, you go to Google and you type Kraft Heinz future stock growth. This is my favorite part of the video, just tapping this out on Google. As always, I like to click on the Simply Wall Street. It just takes you directly to the earnings growth rate, which is 9.5%. We go back here, 9.5, click tab, and as you can see, everything is pretty much in the green. Does this mean it is a buy? Not really. As always, guys, we like to invest in a margin of safety, which is down here, and I'm going to talk about that in a second. But this is Benjamin Graham's original formula, his updated formula, and the current formula that analysts are using to determine a stock intrinsic value. As you can see, they are all green, and these are the potential returns that you can make on each formula. For example, 13%, 88%, and 12%. But now we have to calculate the margin of safety. This margin of safety is calculated by the updated Graham formula, not by the analyst or the first one, right? So I like to invest in companies that I have some room to fail. So currently, Kraft Heinz is at $29, and according to my margin of safety of 35%, I can even buy this stock at $35 if I'm expecting it to reach $55. So this means that this company, by its intrinsic value, could be a potential buy. Now we can also take a look at the discounted cash flow for this company, which is very different from the intrinsic value. We can see on the base case, it will still be worth $42, an undervaluation of 31%. On the best case, it will be worth $66, undervaluation of 66%. And as you can see, 66, 42 is very similar from our 62 and our 55. And in the worst case scenario, this company is undervalued by 7%, being worth $31. And if we take a look at the intrinsic formula, we said it could be worth $33. Now, taking a look at the company's efficiency, we can see everything here is pretty much in the green, whether it's their revenue, their net income, or their free cash flow. Free cash flow is very important because this is what can determine if the company will keep its dividend and continue to increase it. So as you can see, they are up 91% year to date. One thing I love about company is that they have more assets than liabilities. This is just because they have things worth more than what they owe. And I think this is very good to have in a company in order to keep it safe and again, be able to keep paying that dividend. And taking a look at the overall company efficiency, we can see here criteria like gross margin and operating margin and net margin and free cash flow margin. We can see everything is pretty much in the positive. This sort of means that the management team of whoever is running Kraft Heinz is doing a decent job, even though the stock is taking a hard hit. I'm thinking about adding this to my portfolio. Probably it's going to be 0.5 to 1% of my portfolio just to get that dividend and potentially have some growth in the future. So let me know what you guys think, if this stock is worth adding to an investment portfolio, or if you already have it, please let me know in the comments below. I love to hear your thoughts. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you on the next video.